Let's also welcome Rupen Rajguru, who is the head of equity investments and strategy at Julius Baer, joining in now. Thanks a lot, Rupen, for joining in. Wish you a very happy new year. It's the first time we're speaking in this calendar year. And that's exactly the first question as well. I mean, what's your market view for 2023? 2022, India was resilient in an otherwise bleak global market. Do you think that outperformance continues?
Hi. Happy New Year to you, Manglam, and the entire team out there. See, 2022, as you rightly said, that it was a year in which India was definitely an outlier. And we have to understand what are the reason why has India outperformed the global markets by almost, 25%. First and foremost, the earnings story, that is the both micro as well as the micro story of India has been pretty resilient. So that has helped. And second, and the most important factor are the flows, specifically the domestic flows. Last year, the total DII flows was close to upwards of $30 billion. If I were to compare that with the FPI outflows, which finally ended the year with 16, 17 odd billion dollars outflow. On both the parameters, we have to ask the question that whether how it will shape up this year. So on first, we strongly believe that the earnings story is very much, that flywheel has been set into motion, so that will continue. And the domestic flows also, if not 30 billion at least, if I were to purely add the passive money which can come through the insurance companies, the PF money and the SIP book, it would be closer to $20 odd billion. So what can potentially happen is that if there were to be a dip in the market, there is kind of enough ammunition which is there, which will be buying into the market. So just to get into the question of how do we see this year, we see this year as a year of cool off. From a global perspective, the inflation would cool off, the growth will cool off, and we hope also the war also cools off. And in that scenario, what will happen? What continued or what started middle of last year. So that trend probably might continue till the first half of this year, wherein the value stocks have outperformed and probably will outperform for at least first half of this year. And hopefully by first half we will get, as everybody's talking, a key Fed pivot. And once we have a clarity on that, I think probably we will see the growth stock picking up thereafter. But on an average, from a Nifty perspective, at a broad level, we would expect around 19.5 to 20,000 on the upside and probably 17,000 on the downside.
Okay, so fairly ranged. Rupen, since we are on the subject of flows, 95% of the foreign flows which come into India are from the non-India dedicated funds, right? Emerging markets fund, global funds. The big question is, can India see more of dedicated foreign flows? And in that, everyone's watching for clues. Now that China's reopening, do you really see this happening? That India will get a greater share or start getting more India-dedicated foreign flows?
So, Rima, here, for a moment, let's assume even if we don't, I'm not saying we won't, but by default, if this year is the year in which, if the global investors get turned bullish on China because of a pure sheer undervaluation, if the flows into EMs also come back, like with India having around 14% weightage in that index, by default, India will be the beneficiary also, because last year, as you rightly said, a chunk of the outflow was linked to the global indices, EM indices. But having said that, probably since last 2 quarters or so, definitely we are seeing a lot of talks of various funds wanting to have an exposure in EM ex China. So while some of them will materialize, it will take time. So eventually, to answer your question, from a global investor spec, is India right now an asset class? Probably not, but probably 5 years down the line, I definitely see India being a separate asset class, like the way China is, wherein there will be dedicated funds, wherein India will get the lion's share.
All right, Rupen, just hold on to that thought. By the way, the Nifty has seen a good recovery, and we have almost approached that 18,000 odd mark. We're at around that 17,980 odd mark, which is the crucial level. The 17,950 call, that was very, very active, and there was writing being seen out there. Now, we can hold above these levels. The last 30 minutes could be very exciting for the bulls. So we have come to this level. We need to hold on to a year because the call writers will be taken to the cleaners if that's what takes place. 80 points from the day's low. Keep an eye out on that. Even the Nifty Bank, that's moved to around the 50 DMA. We're just around 20 points away. In fact, we're now only 10 points away from the 50 DMA. And as we speak, we've moved to the, to the 50 DMA. 42,618, that's the 50 DMA. So we're interestingly poised. The bulls are fighting back as we speak. It could be expiry related, but a good fight back is what we've seen in the last 20-30 minutes odd. Well, Rupen just had to do a quick market check because, we're going to play out weekly expiry. But since we're talking about China, which has been struggling, and domestically as well, the rural theme has been struggling. Do you believe that both these two themes can be tactical plays? Could be played out maybe for around 3-4 quarters odd. And from the China perspective, I'm guessing commodities and rural plays, there are a whole lot of them out there. Would you play it?
No, absolutely. You're bang on, Nigel, and we would definitely, we believe that at least in the next few quarters, both these themes, be it the China theme or be it the rural recovery theme, will definitely be there at play. And we are already seeing some early signs of that. So while last quarter, all the consumer companies spoke about visible rural slowdown, but if we do an overall channel check, the rural incomes have not come off. Probably they did not consume as much because of higher inflation or higher input prices. But now what we are seeing a reversal of that trend. Inflation also is cooling off. Plus, from a government perspective, as this is going to be a pre-election year, so we will hear, and already government is focusing on the rural India segment. And finally, also the recent the PM Garib Kalyan Yojana, which was extended, also lays a base. That rural distress probably will be capped and incrementally better for consumption. So those plays which are linked to rural India, wherein some of the consumer companies which has good presence in rural India, some of the lower end or probably two-wheelers, or also early entry-level four-wheelers also will get benefited out of it. And sticking to China, definitely it's just if I were to just draw a corollary, it is in Indian context, China is what, say, the PSU segment was a year and a half back, so it was completely unloved, probably underinvested, and also undervalued. So you might definitely see some bounce happening out there.
All right, just hang in there. We were talking about the recovery that we're seeing in the frontline index. Don't lose sight of the mid-cap index as well. When we started the show, we had nearly 1,800 stocks declining for about 1,200 which were advancing. The decliners have now come down to around 1,550 odd, and the mid-cap index at an index level has risen, and it's about 0.5% higher. As against at the start of the show, it was just mildly in the green. The mid-cap index is virtually at the high point of trade as we speak, with a gain of almost 145 points. What's gaining? More of the same. We have seen extended gains on the tire pack. We have RBL Bank, which is doing well. Godrej Consumer has moved to the high point of trade. And Dabur too has actually moved to the high point of trade ahead of the third quarter update coming in from that company as well. Rupen, you spoke about how rural recovery could be a theme this year. How do you play that? Do you play that via consumer staples? Do you play that via two-wheelers? Or do you play that via entry-level PVs? Just trying to understand, the actionable ideas for rural recovery.
Actually, all three, Mangalam. And probably the easiest, derivative there would be on the two-wheeler side. Because while fundamentally on a long-term perspective, two-wheelers have their set of challenges, but purely now, if the volume growth comes back, and at the same time, if I were to look into the valuations of the two-wheeler companies are probably much below their own historical valuation as well as the market valuation, and they all are companies having very strong balance sheet, dividend yields, and all those boxes are ticked. So that's where probably tactically you might see a decent upside. Wherein the other plays, consumer companies, again, it's not that there are 100% focused, rural focused companies, but there can be an NBFC which has a strong presence in rural India. That NBFC can get benefited out of this uptick in the rural market. So yes, I think broadly, I think the sectors which you mentioned are good sectors that one can look into to play this theme.
Okay, so rural NBFCs and some of these two-wheeler auto names. In fact, Jefferies also believes the Indian auto sector is poised to deliver strong returns in 2023 because demand is recovering from its worst slowdown in decades, and they're anticipating a 12 to 18% volume growth on a compounded basis for passenger vehicles, two-wheelers and trucks over FY23 to FY25. Rupen, we'll leave it at that. Thank you very much for joining in.